Welcome, everyone. We'll go ahead and throw up the chat here while we wait to get started. We'll wait a couple minutes to go live on all the different platforms and give everybody a chance to jump on. But for those of you hopping on, feel free to drop a comment in the chat while we wait to get started here. All right, a couple people dropping comments. Good morning, Mercedes, Ashley. We'll wait just a minute here for everybody to be able to jump on and make sure we get to go live on all the different platforms here. Definitely going to be an interesting day for rates. So excited about today's show for sure. All right. Good morning, Jonathan, Melanie, Ben. Thank you, everyone, for tuning in. If you're just tuning in, we're just going to wait a couple seconds here and then we'll get right into it. Go ahead and drop a comment there as you tune in. All right. Well, let's go ahead and get started then. So we can take the chat off there and we will get into it. So, welcome everyone. My name is Kyle Hiersche. I'm the COO of the Mortgage Calculator, joined here by our president, Nick Hiersche, and our sales manager, Jose Gonzalez. Today, like we do every day, we're going to go through the live rates for a bunch of different programs, and we can see how the market is shifting. And I think today is going to be very interesting. After that, we're going to do a deep dive into a different topic like we do every day. And today's topic is foreign national loans. Now, we are a lender that specializes in non-QM loans. And I know Jose has a lot of experience with this, seeing that we are based in South Florida ourselves. But of course, we are licensed in 22 states as well. But being that we are in South Florida and Jose has been a loan officer here for 27 years, obviously has a lot of experience with the foreign national loans. So we'll have him do a deep dive into that here shortly. But before we do that, Nick, let's go ahead and pull up our pricing tool for our loan officer professionals. It is April 5th, just after 11 a.m. So the pricing is live, and let's check it out.
All right, let me go ahead and switch my screen so we can get started. All right, as Kyle mentioned, this is our pricing tool for our loan professionals. We have over 300 loan officers licensed in 22 states, and we can do our DSCR business purpose loans in pretty much every state in the US. So if you'd like to get a full loan estimate, please get with our team. This is going to show our pricing today with our APRs today for our basic programs. Now, for all of our scenarios, we'll set up a nice, easy loan amount of $400,000. Loan to value of 80%, 20% down payment. We'll set the computer to find the best rate at a desired price of 99. That means one discount point in cost. Most customers are asking to buy down the rate a little bit. So that is our typical request. We're going to do, as we do every morning, compare our conforming conventional programs to our FHA programs, and then our expanded guidelines non-QM programs. VA and USDA are specialty. VA is only for our eligible veterans. So if you are eligible, please let us know. We'd be happy to quote it. But not everyone is eligible. Same with USDA. Only if the property is in an eligible area can we quote that. And if you are shopping in those areas, please let us know. But let's start with our conforming conventional program this morning. We're going to do a purchase, 30-year fixed loan, standard loan, primary occupancy, single family, 1 unit, state of Florida, county of Miami-Dade, since that's where our office is. For all of our estimates today, we're going to use a FICO score of 760 and an estimated debt to income ratio of 40 for all of our scenarios today. So let's check out our conventional rates this morning. So excellent, a lot of movement. Yesterday we were at about 6.5. Today we're much lower. This is great. So some great options here at a 6% rate for 1 discount point in cost and a final APR of 6.176. So we love to see when the movement goes down. Hopefully by the end of the day, we'll see some more downward movement as well. So it'd be exciting to see the show tomorrow. So great opportunity. Lock those programs in today. Go ahead and request those quotes today. So this is our conforming options, our conventional options. So if for any reason our customer doesn't qualify under conventional guidelines, the next option is typically FHA. FHA does have a little more leniency on the credit qualification guidelines as well as the debt to income ratio. So we'll set this to FHA. Everything else will stay the same as our previous scenarios, so we can compare apples to apples. And let's check out our FHA rates this morning. Again, we see some positive movement from what it was yesterday. Yesterday, the APR was in the 6s. Today, we're now well into the 5s, which is great. So all the customers out there getting ready to go shopping, today is the day. 5.25% rate here, the best option that we have showing for 1 discount point in cost for a final APR of 5.852. Remember, for FHA, we do have an upfront mortgage insurance and a yearly mortgage insurance, but those costs have gone down recently. So you can compare this 5.852 APR and see that the FHA rates are actually a little bit cheaper compared side by side to the conventional, at least in this scenario. So a lot of people have a little bit of a stigma with FHA. Definitely recommend those out there shopping right now, compare both options. Now, for our final scenario for a primary home, if a customer doesn't qualify for conventional or FHA for some reason, typically other banks and lenders do not have other options. But here at the Mortgage Calculator, we have over 5,000 loan programs under expanded guidelines, aka non-QM, which allow us to qualify customers using alternative income documentation. So let's click over to expanded guidelines. Everything else will stay the same. However, we have one new option that pops up. In this case, we have our income verification options where we can choose a different option rather than full doc. Remember, full doc is 2 years of tax returns. That's what we use for conventional and FHA. So typically we choose an expanded guidelines program because we would want to use alternative income. So that would be a 1 year alt doc, 2 year alt doc, have asset related programs, business bank statement programs. For our investment properties, we have DSCR programs. And our most popular program by far for a primary home would be our personal bank statement 12-month program. That's going to be for our self-employed borrowers. Many times our self-employed borrowers with 2 years of tax returns have various write-offs and have a hard time sometimes getting the income numbers that they want. So in this case, we are going to, instead of using 2 years of tax returns, we're simply going to use the last 12 months of their bank statements to determine their debt to income ratio using those bank statements. So typically we can qualify a customer for much more income if they need to qualify for a higher loan amount, or if they don't qualify at all using some of the other programs, we're able to qualify a customer using this method. So the rates are a little bit higher for the non-QM programs. They always are, but I'm excited to see what they are this morning because these are great options for our borrowers who would not otherwise be able to get that home of their dreams. And we can show these options to make that possible. So let's check out our bank statement rates this morning. So yes, definitely some downward movement. This is great. We always love to see downward movement. So our best option here for the best APR that we have looks like 7.25 rate for 0.75 discount points and cost for 7.289 final APR. So some great options here for our customers in the low 7 APR. Remember, the conventional was in the low 6s APR and the FHA was in the high 5 APR. So we compare across those programs. Obviously, this is a little bit more expensive, but again, this is for a customer who would not otherwise qualify. So these are great options. Definitely recommend if you're out there shopping. and you have some challenges meeting your income guidelines, always compare one of these options. They are not that much more expensive, and we love to offer these alternative options for our borrowers. Now you see there's a ton of different options here, all in the 7s, which is great, some in the 8s. Those might be for people that maybe had a credit event like a bankruptcy or things like that, where we have different variations of these programs. So tons of different options. Please get with our team so they can navigate which one of these bank statement options would work best. Now, before we go into Jose's examples, we're going to do our final 2 scenarios. Instead of primary occupancy, we're going to check out our investment property rates this morning. So we love to work with investors at the Mortgage Calculator. Whether you're a first-time investor or you have 10, 20, 100 properties, we love to offer these options. So let's set up our scenario. Same thing, 80% loan to value, same loan amount, same scenario. This time, we're going to compare our investment property rates for conventional and our investment property rates under non-QM expanded guidelines. Remember, FHA, VA, and USDA are not eligible for investment properties, so we'll simply compare these 2 options. First, we will do our conventional options. Everything else will stay the same as all of our examples before. So let's see what changing it to investment does for the rates. As I say every morning, keep in mind the GSEs have added loan level price adjustments for investment properties. So unfortunately, the computer is not really able to find a 1 discount point cost option. Still some great options here for great rates. Best option the computer found, 6.625 option for 3 discount points in cost and a final APR of 6.868. So yesterday, the APRs for investment properties were in the 7s. So this is still a great option with the APR if you can compare side by side. But many times our investors are asking for basically higher rates for less discount points, right? This $12,000 in this example of cost for this rate would rather be deployed on another investment for most investors. So even though if we go down this list and we try to find a more reasonable cost option at a higher rate, here's a great option, 7.5 rate for 1.875 discount point in cost. Many of our investors would still like to see alternatives. So that's where we can offer our non-QM programs, which have other benefits as well. So for our final example, definitely recommend all of our investors compare our non-QM with the conventional. So we'll set up our final scenario here for investment property, same LTV, and this time we're going to do expanded guidelines non-QM. And we'll see that 2 new options popped up. First, we have to select our income option, which for investment properties, the most popular option by far is our DSCR option. That is because it doesn't require any income from the borrower, no employment from the borrower. We're simply going to use the estimated rental income from the property we're purchasing to determine if that rental income will cover the PITIA, the mortgage expenses of that loan. And if it does, that's a ratio over 1. We have tons of options over 1. And we even have options for properties that don't quite cash flow. If the estimated rents do not quite cover the payment, we still have options for a ratio under 1. So you'll see that here in a second. The next option we always have to select for a non-QM investment property is our prepayment penalty option. Pretty standard for these programs is a 3 year, so that's what we always use for this demo. We can select 0. That will be more expensive and limit our loan programs. So I don't want to do that on this demo, but if it's important to have no prepayment penalty, we have those options. And we have a 5-year option as well that will limit the loan programs, but it does save us some money. But the most common option is 3 years, so that will give us the most loan programs here for this demo. Now let's check out our DSCR rates this morning. Amazing. So we love to see this. Again, positive movement, major positive movement compared to yesterday. So the best option the computer found here for our most popular programs, our DSCR programs, is a 7.625 rate for 0.85 discount points in cost and a final APR of 7.667. So APR just in the mid 7s there. Remember, conventional was in the high 6s, so very comparable here. And keep in mind with these DSCR loans, doesn't require any income or employment. So many times our investors will do multiple loans, cash out multiple properties to buy multiple properties, and it is not affected. We can start as many loans under the DSCR program as we want for any investors out there. Tons of different flavors here of this program. So please get with our team to find which one may fit best for you. Some of these may allow short-term rental income at a little bit higher rates and other variations. Some may allow, for this example, a ratio under 1, a little bit higher rate, obviously, if the property doesn't cash flow, but just tons of different options we have here. there's really hundreds and hundreds of different options here under these DSCR programs. So definitely recommend to get with our team to find which one works best for you. And that's a good segue into our next program. Some of these may allow foreign national investors. So our most popular program for foreign nationals is going to be one or two of these flavors of these DSCR programs that you see here will be eligible for foreign nationals. Not all of them, but Jose is going to go into those details. So let me bring up my screen again, and then we'll give it over to Jose. So as I touched on, our topic for today is going to be foreign national home loans. So Jose will define exactly what is a foreign national. That's usually the most common misconception. We need to know who we're talking about first. Very specific definition. Once we define that definition, we can talk about the loan programs. So remember, a foreign national doesn't live in the U.S., so there's no such thing as a primary home for a foreign national. By definition, they do not live or earn income in the U.S. That would not be a foreign national. So we're going to be talking about second homes and investment properties. Investment properties, DSCR, super popular option, probably our most popular option, tenfold when it comes to a foreign national investor. But I'm sure Jose has a few different versions of this program. So if you're ready, Jose, you can go ahead and take over.
Yes, awesome. Good morning, everybody. Thank you for joining us for Daily Rates Live with the Mortgage Calculator. Foreign nationals is definitely one of my favorite topics, especially being in the multinational environment of South Florida for the last 27 years. Definitely have seen the benefits of incorporating foreign national into the mix of business. I will also add, we also do I-10 loans, but I only brought up I-10 to note that foreign national loans and I-10 loans are not the same. A foreign national borrower is a citizen of another country, does not live permanently in the U.S., does not work or derive any of their income either from the United States, whereas an I-10 borrower, although they may share the not having official status in the U.S. as a permanent resident, they are living in the United States full time, and they are deriving their income also from the United States full time. So that is the main difference from an I-10 borrower to a foreign national borrower. The I-10 borrower also is going to need U.S. credit for their loan as well. So foreign national, not a citizen of the U.S., not a permanent resident either of the U.S. So if they are both a citizen of another country and citizen or permanent resident or non-permanent resident of the U.S., where they're working here full-time and deriving their income here, they would not qualify under a foreign national loan. So just to be clear. Now, even though I do mention that their income cannot be derived from the U.S., we do have DSCR options as well as for full doc options for the foreign national borrowers. Now, why would you choose one over the other? Well, typically, the DSCR option is an option for investment, pure investment only, where the borrower cannot occupy the property. So neither the borrower nor any of their family members can occupy the property. Versus the second home, they can occupy the property whenever they're here, and then when they're not, they can either leave it vacant or they can actually rent the property out on a short-term rental basis. As long as there are no leases, you are allowed to rent out a second home in that manner as a short-term rental only. So the full doc option for the foreign nationals would be a second home option, or it could be an investment option as well if you are going to use rental income to help the borrower qualify as well as their income. I will note, though, that full doc on a foreign national is not the same as full doc on a national borrower. It is a much more, typically much more simplified process where If they're self-employed, we just require a letter from their accountant in their country of origin specifying their income and company ownership. And if they are employed, it would be a verification of employment letter from their employer. No tax returns or any additional documentation like that would be required on a full doc for national loan. Credit scores, US based credit is also not usually a requirement. Now, I will say there are those few outlets out there that do actually require US based credit for your foreign national. So just be on the lookout that any option that you may be considering for your borrower does not actually require US based credit. In most cases, they do not. However, if the borrower does have US based credit, then all credit requirements for the loan program would be applicable. So if your borrower has a US based credit, it's a 660, and the minimum score for that program normally for a US borrower is 700, then your borrower is not going to qualify, even though they are a foreign national, if they have less than the minimum credit score using US based credit. So now that I laid down some groundwork, let me get into our examples here. So our first example is 75% LTV or 25% down payment. That is the lowest down payment or highest loan to value, whichever way you want to look at that example, for a foreign national loans. 3-year prepay, 5-year prepay, 1-year prepay, and no prepay is applicable. In my examples here, I'm pricing 3 and 5-year prepays to show you the differences. So right here, we're looking at 3-year prepay DSCR option for national. So even at 9%, we have a lender credit, and that is our lowest cost option. And we can buy it down all the way to 8%. That's just under 3 points. I believe that was like 2.9 points, something like that. So very good option for our foreign national DSCR with a 3-year prepay. So now let me show you the same DSCR with a 5-year prepay. This is always good to consult your borrowers. And you see that the rate drops by 0.375, the lowest cost rate to 8.625. I'm going to click on over to the other one here so you can have it clearly there. So we had 9%, right? And over here, 8.625 and 7.75 is the lowest rate option versus 8%. So not only is there a lower rate option, but there's also a lower cost associated with it. So always good to always offer multiple prepayment options to your borrowers so they could see what the cost savings are should they accept longer prepay, or so they could see what the additional costs are should they accept a shorter prepay. So now we have our full doc 25% down option with a 3-year prepay. Again, slightly lower rate. I would say the rate difference is almost the same as the rate difference from the 3-year to the 5-year prepay when you go from a DSCR to a full doc with a 3-year prepay. Now, full doc with a 5-year prepay, and all of a sudden, look where we go. And I did confirm that in this option, foreign national was an actual option for this because it looks so good. I clicked into the matrix, and this is possible. Amazing. 7.75, the lowest cost option, and recently unheard of 6.875. Wow, at around 2.9 points. So all of these rates are within compliance levels to be able to be offered. Right. So again, this was our 5-year prepay. So now we have our full doc, Florida only. This is a Florida only option. It's available for Florida and available for New York City. co-ops $1 million and over only. So here for Florida, if you have your foreign national option, this is a 7-1 arm. This option is only adjustable rate mortgages, but note 7-1 arm is 7.25. Keep in mind, most foreign nationals will pay off that loan before 7 years. They really are debt aversive. That's how they like to do it, because their rates are just so high in their countries that they're just not used to financing stuff for a long time. So ARMs are great options for foreign nationals. You can actually do a 3-1 ARM with this program. I think it was 6.625% rate for a 3-1 ARM with only 3/4 of a point.
Should have showed us that one, man. That's crazy.
Well, most people don't go for the 3-1 arm. I'm trying to keep it as close comparison to a 30-year fully amortizing with the 7-year. But I did actually have a foreign national accept a 3-1 arm on a loan recently, because he only needed the money for like 2 years. So 1 year prepay on that one. He paid a little extra to get the 1 year prepay, but he's getting, actually in his case, it's a little bit lower. In that case, it's 6.375 with the 1 year prepay, because he's opting for a little bit more upfront cost. It wasn't 3/4 of a point. But you see, phenomenal here. Now you'd be getting below national rates. All right. And Florida only for national full doc. And actually that is an incorrect title. This is full doc, fully amortizing 30-year loan. So this is not a Florida only option. This is the same option that was the full doc option that had that amazing rate down to 6.875. This is the same option as a cash out refi. So notice 8.375 is still offering a lender credit, and 7.375 is still up there under 3 points in cost. So this is full doc, and this is at a 70% loan to value, which is the max loan to value for a cash out refi for national. And now with our DSCR option, that was a DSCR option, full doc option that I showed you, and this option here, it is the DSCR 70% LTV cash out. So you do notice from full doc to DSCR, I'm going to go back to this is the full doc option right now at a 70%. So you see really sweet rates here. And this is the DSCR option. So there's about a 0.625 difference in the rate going from DSCR to full doc. So again, great option for your borrowers that are going to occupy the home, the property of the second home, and rent it out every now and then as a short-term rental. Definitely not the DSCR option on the full doc. But DSCR, if they're not going to live in the property ever, much more simplified document request. For this option that we're going here on the DSCR option, we do not require an accountant letter. We do not require a credit reference letter. We do not require a visa if they are signing up in their country. If they're not coming to the U.S. to sign, visa is not required either, which is a stumbling block because a lot of countries outside the U.S., consulates and embassies were closed down due to the pandemic, and there's a big backlog on visas. So most programs require a visa, a valid visa, in order to be able to fund the loan. Well, with this particular DSCR option that I was quoting today, a visa is not required if they are signing in their country of origin.
All right, perfect. So great options there. Amazing. As Jose said, he's somewhat of an expert on this, so it's great to hear from somebody like that. So we'll go ahead and wrap it up then. I don't see any questions. Again, we have over 300 loan officers all around the country, licensed in 22 states. We can do business purpose loans in almost every state. So if you want to be walked through this process, by one of our loan officer consultants, you can visit us at themortgagecalculator.com and we can pair you up with one of our loan officer consultants. We appreciate everybody for tuning in. Thank you, Nick. Thank you, Jose. Thank you for tuning in. We do this show every weekday at 11 a.m. Eastern time, and we do a deep dive into a topic each time. It was great to see the rates movement today. If you're ready to, pull the trigger on a deal, today is going to be the day. And if you're a loan officer, today is the day to follow up with all your clients and get some things going. So again, thanks for tuning in. We hope to see everybody tomorrow at 11 a.m. Eastern time.
Thanks, everybody.
Care.